everyone, Matt Curfman from Richmond Brothers here with my trusty companion, Mr. Oliver, the Richmond Brothers mascot, my sidekick, and the smartest economic guru and financial wizard you've ever met. Right, Oliver? I just want to kind of give an update heading into November and a couple of just big things to kind of keep in mind. One, we're now in the last 2 months of the year. And so if you have a non-qualified account, meaning an individual, a joint, maybe a trust account, something that's not under the IRA, Roth, or 401k umbrella, just make sure on your monthly Fidelity statements you're pulling up and looking at realized gains or losses. That's usually on page 2 or 3 of your actual statement. Just want to make sure that as we head into the end of the year, you see those numbers. And whether you're working on your own taxes or you work with an accountant, just making you aware of those numbers so that you're able to plan before year end if necessary with your tax person. So check that out. Number 2, obviously we're heading into the year end and we've had lots and lots of great questions and dialogue with many of you about the big beautiful bill and what that means for taxes. So many people are using the standard deduction. By the way, this is the bill that passed in the summer of 2025. So we now know the end of the year where tax rates are and where they're going to be for the next 3 years, 26, 7, and 8. So most people are using standard deduction. So I pulled some numbers. And if you are married filing joint, the standard deduction currently is $31,500 for this year. That means if you jointly made $100,000, you just deduct $31,500 off of that and you're only taxed on the remainder. And then that goes into the tax bracket. So on top of that, there is a senior extra deduction of $1,600 per person that was already part of the tax code. And then on top of that, what added to the bill is if you're 65 and older, there is another senior deduction of $6,000 per person, which means $12,000. So if you actually are a senior, 65 and older, and let's say you have a standard deduction of $31,500, you have $1,600 per person as another standard deduction, and then $6,000 each for 65 and older, you literally get up to somewhere around $46,000 to $47,000 in a standard deduction. So now again, if you have $100,000 of gross income, you're only taxed on the remainder. So you should be in real low tax rates and brackets. That extra standard deduction of $6,000 does phase out if your married filing joint income starts to exceed $150,000, and it's completely phased out by $250,000 according to the tax code. So again, just relative to 2024 and all things equal, if all of your finances are exactly the same or pretty close to the same as they were, most people should be in a position where, based on the tax law changes, they would not owe considerably more taxes. However, if you have questions, reply to this email and let us know. We obviously don't give tax advice. We are not CPAs or accountants, but we are very familiar with the tax code with respect to the investment world and the retirement world. So happy to give you thoughts and questions to ask your CPA and or guide you on that path. This year, I just kind of did a little bit of a reflection on what I call noise. There's been so much noise out there this year. If you think about all the things that have affected just market gyrations and fear and concern, you go back to the beginning of the year, we've been through 10 months. And so there's been war overseas, obviously continued with Russia and Ukraine, Israel and Gaza. In the summer, there was a situation where the U.S. bombed 3 nuclear sites in Iran, and still headlines today are coming out saying President Trump is warning them not to rebuild these sites. So again, just that the word nuclear sites and all of these are headlines that cause concern and fear. We've obviously going back to February, March, and April, and then again over the summer, and even more recently, tariffs continue to be a major headline in the impact on the economy. I suspect, or we suspect, you'll see, when we come into the holiday season in the U.S., that's a time for a lot of retail purchases. You would think tariffs are going to be higher prices for those retail products, which means more spending to get to the same net economic output from consumers. There's been a lot of noise around the Fed this year and what they're going to do with interest rates. We did just pass another period where the Fed met in late October and they did lower interest rates another 1/4 point. And then we talk about inflation and higher cost of goods. Social Security announced a 2.8% increase for 2026. So that's another big news piece. We are now entering the longest period for a government shutdown, which again adds a lot of risk and affects a lot of industries. So think if you're a pharmaceutical and you're trying to work through an FDA approval process, or the SEC, Securities Exchange Commission, is working with you on an IPO, any business. These are all government agencies, and so if they're not allowed to work, there's going to be a huge backlog when they get back to work, and then probably even longer delays. So it affects a lot of things, including you see headlines about SNAP and food benefits and things of that nature, which are really important in our economy. And then last but not least, another major headline continues to be AI, which is artificial intelligence and its impact both on the world and markets and corporate efficiency. So why am I telling you all this? There's just a lot of noise out there, and sometimes noise is okay, but you're basically seeing our economy still do, I would say, okay. We're seeing massive market gyrations in both directions. And then, so as it comes to just your overall portfolio, especially those of you who are just about to retire or already retired, or trying to save up a sum of money towards retirement, the question really just becomes, what's the best allocation strategy? And so our team is here to help talk through those questions with you and help guide you, help keep you informed, and direct you along this path kind of into and beyond retirement. So thank you so much for tuning in. Thank you for being part of our Richmond Brothers family. And as always, if you have questions, you can email us directly, questions@richmondbrothers.com. Happy belated Halloween. Happy upcoming Thanksgiving. I suspect you may hear from me again before Thanksgiving. But thanks for checking this out, and thanks for being part of our family.